Hello everyone, welcome back.
Hello, good afternoon.
Good afternoon, doctor.
Hi, doctor.
Hi,
Hi,
we are
good
the home
afternoon,
run now.
doctor.
Hi, doctor.
Hi there.
Back, Doc.
Hello. Just
Now.
after banana leaf rice.
Oh, that's going
So
to be a
make
bit
sure-
challenging, yeah.
Make sure don't show us the numbers again.
No, now we will talk about how to prepare ourselves for the assignment, yeah, Mandan? Yeah. Actually, banana leaf is good, lah. Yeah, if you can still have but leaf at this juncture, it's a good thing.
Yeah, we have a banana tree at our backyard.
Ah,
Supply is okay.
okay, that's great. Okay, shall I start sharing my screen now?
Yeah,
Okay.
doctor.
Let's do that, yeah?
Sure.
Yeah, thank you. Share screen. Yeah, screen. Share. My first stop would be the Word document. There you go. So this is the task that we have. Both task of 3,000 words. So 6,000 words, which is about right for a master's level program. So we have task 1, 50% of the marks, and task 2 also 50%. Word count 3,000 for task 1, 3,000 for task 2. And this is your submission deadline. Important date for you to remember.
It's more than 3,000, is it okay? Or
Plus minus 10% normally we say. So that means
Kalau customer got high credit card utilization and do business.
Doctor, you're in mute.
Doc, you're on mute.
yeah.
Please
Okay.
stop the microphone when the doctor is talking. Thank you.
So it's 2,700 to 3,300 words. That's the meaning of this 3,000 words. Yeah. So it means 2700 to 3300, because we give plus minus 10% allowance. Yeah. So this is the important date to remember, after which you can start getting ready for Christmas, and then the usual stuff, that you should have academic honesty and stuff like this. If you look at the outcomes, yes, is there a question coming?
Yeah, sorry. This is Kim. I just wanted to ask if the 3,000 words are only comprised of the discussion itself, or does it include all the tables and appendices?
We will see the details later. I think it is only the discussion. Yeah.
Thank you.
Come.
Doctor, one more question.
Yeah.
In the portals, under the assignments, right, the due date mentioned is actually 30th of November.
Mm-hmm.
So, which one is the right date?
Okay, the ultimate authority for this is Francis. He will tell you. Maybe Brother Mohan, can we confirm?
We follow the WIC portal, but will be updated again by the tutorial Dr. Pensi.
Yeah.
Okay,
So
thank you.
right now, that means 30th November is the one that should be taken into account now. 1 month. Yeah.
Yes.
Since we just entered November. Yeah.
Okay, noted. Thank you.
Yeah.
I'm
And
sorry, but
Sean-
I don't think that is correct, right? Because we still have for those of us in group 70, we still have our previous assignment that we are still working on. We only took a break this week to write this one. So 17 seems like the correct date. They just need to go and update it in the in the student portal.
It will be updated or it will be informed to you by the tutorial next week by Dr. Frank next week. Thanks.
Okay. Like I said, Francis will be the ultimate authority on this, yeah? Yeah. You all got the news, isn't it? Our, the first James Bond, Sean Connery, passed on. Yeah, he was 90.
Yeah, very sad story.
Yeah. Almost like end of an era, you know? Yeah. Well, anyway. So this module, you should understand what is the outcome. The outcome that we want to see here is, can you define certain terms? Can you analyze? Can you bring together different concepts and present them? That's called synthesis. Can you look at two sides of a coin, critically discuss, and can you interpret financial accounting reports and strategies and key concepts and comparative models and their relationship to financial strategy and decision making? So there must be something about strategy here, obviously, yeah? In fact, the second task is all about financing strategy. Identify, analyze, and evaluate financial business and enterprise positioning within the context of corporate investment, asset management, decision making and strategy, and economic, legal, and tax environments. So this should give you an indication of what are the kind of things that you should be talking about in your assignment, yeah? So it's not just work out a bunch of numbers and okay, this is what the numbers mean, thank you very much. No, it has to be taken in the context of the companies that you are analyzing, the business that they are doing. What does it mean for their business strategy? What does it mean going forward? Now maybe you can look at it with hindsight a little bit. If you are doing a financial analysis for up to 2019, you can add in a little bit of hindsight, I suppose. That is possible. At the same time, when you are talking about different sources of finance, one of the requirements of task 2, as we shall see, is to try to connect financing activity with investment activity. So this morning we were talking about investment activity, and I suggested to you that when you are doing the financial evaluation of long-term investment, there are two filters first, or two feasibilities first that you must consider. So when you're looking at feasibility of any project, any big project, first you look at strategic feasibility. You ask yourself, is this project such that it has a good strategic fit with what we are doing now? In most cases, that's what you want. You want your project to have a good strategic fit with what the company is already doing. Your current position in the market, you already want to do that. Unless you are saying that, oh, we are very brave, we want to go into a blue ocean, we want to do some market disruption. Well, if that is the strategy, that's fine, as long as it is well defined, yeah? It should not be something that we do on a try-luck basis. So the first thing has to be the strategic feasibility. The second one has to be the operational feasibility. So operational feasibility means you must have the resources, the strategic resources. Strategic resources include money, include people, include technology, yeah, include market positioning. All of these things must be considered. And then the third feasibility is the financial feasibility, and I gave you a little peek into how the financial feasibility can be done. Of course, the process is a little more involved than what we touched on today, but like I was trying to do some soft sell to you, if you come to my corporate finance class, then you can get the details, yeah? Trying to increase my votes for corporate finance, what do you know? Okay, let's jump into the task straight away. The first one, task 1, 50% of the marks. We have to choose a listed company on Bursa Malaysia main board, and these are the sectors that you can go for. Healthcare, so IHH and companies like that. Plantation, like KLK, what we talked about, yeah. Technology companies, so many new technology companies now. Consumer products and services, so many to choose from. Even energy, Yeah, I suppose when you say energy, that includes ONG, yeah, oil and gas, and industrial products and services, transport and logistics, yeah, and utilities. Yeah, so you could even choose Tenaga or something like that. Now, I think in consumer products and services, technology, you can even choose telcos, yeah, if you want to. So, what do you have to do? You have to obtain the annual reports of the company and one of their main competitors for the latest 5 years from their website or from Bursa Malaysia. Yeah, I think yesterday was it? One of us commented, "Wow, 5 years is a lot of work," and I agree with you. And I've suggested to you to look at 5 annual reports. Yeah, look at 5 annual reports, the latest reports, 2019, 2018 reports. From that 5 reports, you choose the 2 companies that you want to work with, and then for those 2 companies that you have selected, you will have to go and download another 3 annual reports. So altogether you need 4 annual reports, because 4 annual reports will give you 5 years. Yeah. So once you have selected the 2 companies, for that 2 companies, you will have to download 4 annual reports, and you can also decide then which one is your main company and which one is the comparative company. The main company, of course, you will write a bit more about it, yeah, and in more detail. And the competitor company, you will emphasize more when it comes to things like the efficiency ratios, like the day sales outstanding, the working capital cycle, and all that. Those are the comparisons. Yeah, you might want to benchmark the kind of borrowings that they are doing. So those are the benchmark kind of things. And certainly you can also compare profitability and investor returns and liquidity, stuff like this. Yeah. Okay. So
Doctor,
yeah.
I have a question. Jack here. You told just now that you need to choose 2 companies, right? For this assignment, and we have to take one of those annual report, or one of those company has our competitor or has our main. Do you have any suggestions? How do we choose either one, whether to be the main or competitor? Is it based on the stock price, or is it based on the industry, or how do we do that?
Yeah, very good question actually. You make that company for which you have more information available. You see, some companies a bit more open, like IOI, very open, lot of information available. Yeah. So if I was choosing this kind of companies like KLK, IOI, and all that, I would probably make a company like IOI my main company. I think for the purpose of this assignment, the main company should be the one where you think you can get the most information and with reasonable ease. Make that your main company, and then the other one can be your comparative competitor. Yeah. Yeah, that's a very good point to note, and so I hope you keep that in mind. Yeah, try to go for those companies where the information is readily available and is clear enough, and their business is easy enough for you to understand. Of course, the objective is for us to understand financial analysis and management, but I hope that our discussions up until now has achieved that more or less. So now your next task should be how you can get a good assignment written. And I think I mentioned this on Friday night. I'm not sure if I did, but I always suggest to all my MBA candidates that when you prepare your assignment as something that you are going to showcase to people when you go for a job interview, or when you want to do a presentation to other people, to show them, look, this is the kind of work that I have done. Yeah, passing the assignment is secondary. I mean, that's a very low level target. Yeah, a real good target should be that you want to really create a very, very good evidence of the best work that you can do. So for that reason, you should choose companies where there is a lot of information available, where you can really write a good assignment on it. Sometimes people have this view: should I challenge myself? Should I try to do a sector which I am not very familiar with, but I've always wanted to know about this sector? Why not I take this opportunity to do this? Well, I would humbly have to disagree with that point of view, because you want to challenge yourself after you have submitted your assignment. Go and do one more for yourself. That's different. Yeah. And you need to motivate yourself to do that. Yeah. But otherwise, I would suggest choose those companies where you firstly are reasonably familiar with the business and or the companies, and secondly, the information is readily available. Yeah. That will be very, very important criteria for you to do well. Okay, so what are we supposed to do with this company and the competitor? We're supposed to write an introductory report on the activities, and later I will show you what is the marks breakdown that the examiners have given, that the university has given, and how we respond to it. So I will be just sharing with you roughly a roadmap of how many words you use in each area of activity. Then the technical details will be covered by Francis, of course. Yeah. And the position in the industry concerning its competitor. So note to self, we have to talk about the relative position of this company in its industry. Yeah. So these are the activities, and this is the relative position. Basically, why we need to do that is because when you're comparing two companies, no two companies are going to be identical. Their market footprint is going to be different. One company may be more focused in one area, another company may be focused more in a slightly different area. So when you do your analysis, you should actually take cognizance of this fact. Yeah. Sometimes you may even have one company's year-end date a bit different from the year-end date of the other company, and usually we say that if the year-end differential is 3 months, not a big deal. If it is 6 months, try to avoid it. Yeah, because it's going to give you a headache. So if one company, let's say their year-end is 31st October and the other one is 31st December, then it's still okay, still close enough. Yeah, because you are going to do an overall assessment of the companies at master's level. That is what we are doing. We are not going blow for blow, ratio for ratio. Yeah, that's not the objective of the exercise. Yeah, so the introductory report on the activities of the company, then the position of the industry concerning the competitor, critically evaluate the key drivers of change that have affected the industry as a whole. So I suspect when you talk about key drivers of change in the industry, we are again talking about a pre-COVID period. Yeah. Of course, in your concluding paragraphs, you might say going forward we are passing to 2020 and COVID has changed the world forever, has changed how we do business forever, and we are now entering the new normal. But I think you should save that maybe only for the conclusion. Yeah, because you are supposed to analyze the company for the latest 5 years. So most of your discussion should be focused on how did the company perform during those 5 years. That's what we want to do. Yeah, that's why part B emphasizes this: critically compare and analyze their financial performance over the last 5 years, relating to each category of ratios. Tell us which company has performed better, and overall which company you think is better managed, and you have to give your reasons for that. Yeah. And then part C, arising from your analysis, identify any strategic and operational issues that need to be addressed by the companies to make appropriate recommendations with justifications. Yeah. So like I said just now, 3 types of feasibility: strategic feasibility, operational feasibility, and financial feasibility. So think about what are the strategic changes that they may need to make. What are the operational readiness things that they may need to do in order to take up your suggestion for maybe better performance or something like that. Yeah. And of course, you are allowed to state problems, limitations, and assumptions that you need to make to answer the question. In this area, from what I understand, examiners aren't too happy, especially when your papers go for second and third marking. Examiners aren't very happy when you say, oh, the problem is I'm very busy with work. Problem is, because I'm so busy, I didn't have enough time to download this data. But if you had given me 12 months to do this, definitely I would have done a better job. These are not valid excuses and should never be written in your master's assignment, never. So the problems here would be problems of data not being available in the market. That, it's not available on the website, not available here and there. Or you can say that this data is available, however, it is available only for a very short time period, does not cover the full time period. So I have to make the assumption that whatever data I have that covers this 3-year period also applies to the 5 years, something like that. Then that's fine. Yeah. Please note that it's your responsibility to check with Francis if you are not clear about your chosen company. Yeah.
Hi, Dr. Sandeep.
Yes, Sandeep.
Okay, you said that overall which company is better managed. Example, if we were to take our main company, but the competitor is much more better managed, is it okay for us to talk about the competitor rather than our main?
Yeah, that's perfectly okay. The main company is simply the company for which you have more information, that's all. And it's possible, after your analysis, you might find competitor is doing better than the main company, yeah?
Alright, thanks, Doctor.
Welcome.
Yeah, Doctor, can I ask a question, Doctor?
Yes, Daniel.
In coming back with that 5 years, because one annual report, it actually covers 2019 and 2018. So if it is
Correct.
5 years, so download one which is 2019, then download another one which is in 2017. Because 2017 will cover 2017 and 2016.
I wouldn't recommend that. You need data for 5 years, so just download the annual reports for the last 4 years, because sometimes there are prior year adjustments. Sometimes what we have reported in 2017, we have later made certain adjustments because of post balance sheet events. Yeah, so I wouldn't want to skimp on that lah. I would say please just, you need 5 years, download 4 annual reports. Not really too much of a trouble, yeah.
Doctor?
Yeah.
Doctor? Karen
Yes.
here. Just to
Yeah.
check, can I choose an industry or sector that not mentioned in this given? Like for example, the finance industry or insurance, any
No.
other?
No. Finance, industry, banking, insurance, and all that is not what FAM, this module is about. That is a different module altogether. If I'm teaching FAM to bankers, our subject matter is totally different. Yeah, we talk about Basel III, we talk about Camel, the ratios we use are different, totally different. Yeah, so this is not what the module is about. The module is about only those different sectors that we have talked about. That's why we specify the sectors.
Okay, thanks.
Hi, Doctor. I have a question.
Yeah.
Let's say the task is to choose 2 companies. One, the main company and a competitor. For example, I'm taking 7-Eleven.
Yeah.
And probably the competitor MK Mart or KK Mart.
Yeah.
And probably by size, the competitor is small. 7-Eleven probably might be larger.
Huge, yeah.
So my question is like, when we take the competitor, should we try to take something equal to the main company, or does that matter?
it matters because the requirements of your assignment are choose the closest competitor. So if there is some company that has a size in between 7-Eleven and KK Mart, if there's a company that is bigger than KK Mart, maybe not as big as 7-Eleven, then that is the company you should choose. But in the event there is no company in between, it's only 7-Eleven and KK Mart, then I suppose it should be alright, yeah? Because the requirement of the assignment is closest competitor in existence.
Doctor, this is Jaswinder here.
Yes.
Just to clarify, in example, let's say if you choose a telco, if a telco has got 11 subsidiaries or 12 subsidiaries and the competitor has only one operating company in Malaysia, is that possible?
Yeah, like DG has one operating company, but Axiata has many subsidiaries. Yeah, it's possible. It's possible. So when you do your analysis, that is what the critical analysis is all about. That is what your limitations are all about, where you will have to then specify in your assignment that look, I am comparing the results of these businesses, but their market footprint within Malaysia is different. So I might not be able to migrate some of these observations that I have made to the entire industry. Yeah,
but doctor, wouldn't that be an issue on the financials? Because let's say an example, as you mentioned, Axiata, the financials may be different comparatively to Maxis or DG, which operates only in one foothold. I mean, in Malaysia.
Yeah.
So would that be, how do we mitigate that?
Then you will have to get some additional information. For example, like if I'm talking about DG, on a worldwide basis, DG is a very large giant company, bigger than both of these Maxis and Axiata, I think. If you look at total market cap, global market cap. Of course, it is called Telenor, I think, on a worldwide basis.
Again, still arguable discussion.
Yeah. So then you would have to state that as a limitation if you want to take it. I would consider it a limitation.
Okay. All right. Okay. Thank you.
So the safer thing to do is to try to find those with similar market footprint. Yeah, easier to compare. Okay, all good.
Hello, doctor. Just want to ask whether if we can choose like different company with they have different sectors. Like I will choose like energy company, and then second company and competitor in the in plantation company.
Then they won't be competitors, would they?
So
they have to be in the same.
It should be the same sector, right?
Same sector, same industry, and closest competitor. That would be the best. Yeah.
All right, got it. Thank you very much.
Doctor, this is Jay here.
Yes, Jay.
My question here is, let's say, for example, that I'm going to concentrate for oil and gas, and I'm going to take Petronas as the main company. As we know, Petronas is practically a monopoly in Malaysia. And
Dagangan or the group? Because you have Petgas, you have Petronas Group, you have Petronas Dagangan, three big listed entities, you know.
Okay, so it is okay that if I zoom down into their subsidiaries and then I complete with it, that for example we have Petrol Dagangan against maybe Petchem or something like that. Would that be possible?
Yes, that will be better because market footprint will be closer. Yep.
Alright, that is still possible, right?
Yes, very much so.
Alright, doctor, thank you.
Welcome.
Doctor, can I have a question?
Yes, please hold.
What kind of industry product, if you say I selected it?
What kind of industry product?
Yes.
So if you look at our listed companies, there are many companies that are in FMCG. There are many companies in commodities or even downstream activities. So any number of companies actually.
Is it aerospace company?
Say that again.
Aerospace company.
You could take any company actually, as long as they are listed on Bursa Malaysia. They are part of consumer products and services. Yeah.
Oh, okay. Thank you.
but make sure you have a sector where there are at least 3 or 4 companies, so then you can choose 2, for your comparison. That is important.
Okay, thank you.
Doctor,
Jay here again. Doctor. Deva here. Jay, sorry Jay, I get a quick one.
Hey, go ahead first.
Okay, good afternoon, Doctor.
Good afternoon.
Very quick question, because I missed a few lines earlier when you were explaining about task 1. You were saying that for the 5-year comparison, you just take 4 years of annual report, and then a couple of years for your competitor. Can you just repeat very briefly on that statement, please? Because I couldn't get.
You take the 5 years for your main company, and 5 years are contained in 4 annual reports, which means 2019, 18, 17 and 16 annual report for a period ended in 2019, for a period ended in 2018, for a period ended in 2017, and a period ended in 2016. So this will be the 4 annual reports, and because each annual report already has the prior year numbers, so you won't have to take the one for 2015 now, because it's already covered by these 4. Now for the competitor, sometimes some candidates feel that they just take the last 2 years should be good enough already. If you want to talk about trend, for example in profitability you need trend, trend analysis. So for that you will still need the 4 annual reports for your competitor, unless the last annual report already covered the trend for you, in the initial part of the report. If they have already given that to you, maybe you can get away with that. If you
can I summarize such that my main company I take 4 years, and also my competitor I take 4 years as well, but when I elaborate it in my report, I would just justify my main company's positivity and not talk too much about the positivity of my competitors. Can I justify that way? Because I'm going to take both 4 years for both of them.
I wouldn't say positivity, Devaj. I would say you have to stay neutral, stay very neutral. Like you are a professional advisor, you may choose a main company, like just now one of us suggested. What if the competitor is better than the main company? That's okay, that's fine. So we take a very arm's length view on it. Okay, there was one more question coming, I think. Jay, is it?
Yes, Doctor. Doctor, for class C, that is, you were mentioning about the strategy feasibility that need to be adopted, right? It could be from the strategy, operation, and financial point of view. Would there be a model that you would recommend, especially for the financial product portion, that we could, imply for this particular assignment, so that we are more easier for us to?
Yes, I will discuss some models with you, Jay. Now I will discuss some models.
Excellent.
For sure.
Doctor, sorry, Doctor. I have a question. So I'll be choosing a medical center, okay? Maybe it's Pantai or maybe it's Tokuje, and there are a number of healthcare centers that they are competitors to this medical center. So how maximum number of competitors I can choose is how many? Is it 3 or 4 or
One. But because if you are like looking at 3 or 4 annual reports, let's say you download 4 annual reports from that 4 different companies annual reports, you decide that I want to take company A and company C. These are the 2 companies that I'm going to use for my assignment writing. But because I already have the annual report of 2 other companies also in the same sector, when you want to talk about the industry, you can read those annual reports, and your statements about the industry will be better balanced because you have taken a bigger sample. Don't you think? That's how it works.
Thank you, Doctor.
Doctor, if I was to take a Swedish company with its competitor, but they're not listed on the Bursa Malaysia, is that okay? But they are listed on the Swedish Stock Exchange.
I think based on what I read in the assignment, cannot. Must be the same boss, must be the same stock exchange.
Right, okay.
Dr. Vani here. So
Yes.
I just want to clarify. You asked for performance review for 5 years, but why do you need 4 years annual report? Because each annual report there is a comparison of 2 years. So you
Yeah.
just have to print about 3 annual reports will be fine.
Yeah, actually, another person made an observation like that. I won't say that you cannot lah. Yeah, if you think that 3 reports are okay, that means you do 2019, you leave out 2018, then you do 2017. That's fine. But sometimes when companies publish their information, they have what we call a prior year adjustment. So there might be something in the 2017 report which has been corrected in the 2018 report. So I don't see if it's very much extra effort to download 4 annual reports. Yeah, but if you think you want to get away with 3, okay, that's fine. I have no fight with you on that. Yeah.
Doctor, one question. Okay, so the KLK annual report you shared with us. Okay, so it had all detailed components in there for our consideration. It was quite easy for us. So if I take a multinational company which is listed in Malaysian Stock Exchange, as well as a local company which is a competitor, okay, so is the component structured similarly, or it will be difficult to find all the structures, like all the components, what is required?
As long as they are listed on Bursa Malaysia, the accounts will be prepared following the Malaysian Financial Reporting Standards, MFRS. So you will find all the components there. Now, every company's accountant, they are given a little bit of flexibility on how they're going to present that information. So you will have to keep a little bit of a flexible mind, in that you should be ready to see that this company's presentation might be slightly different, right? Some companies will use a term profit from operations. Another company may say operating profit, you know. One company may say statement of profit or loss. One company's accountant is still very conventional. He still calls it income statement. So it's possible. One company may say, I want to call my statement of profit or loss and other comprehensive income. Some companies just say statement of comprehensive income. So other than these little changes in the nuances, I think the structure will be there. You should be all right, as long as they are both listed on Bursa Malaysia. Yeah.
Yeah. Thank you. That was the actual confusion there.
Doctor, can I speak, Doctor? Yeah. I just, but it somehow like seems to me that we are actually getting into the first hurdle, that is the selections of the companies like here. Yeah. So I just want to trash it out myself. If I select Hapsing Consolidate with Taekwon, and as a third company like maybe IOI, would that work for me?
I think it will. Yep.
Yeah. Okay. Thank you.
Yep.
Hello, Doctor.
Yep.
Yeah, Alan here. So would like to ask regarding the case study we discussed yesterday. So we only discussed 2 years. So because now we need to do allow 5 years for the one company. So we need to do side by side 2 company, or we can separate page for one company first, then another page for the second company.
Okay, if you are asking me in terms of convenience, like now I'll give you this template. You just copy the formulae of this column and you just extend it for 5 years, and you can do the same company, and then you can copy the whole thing and put it onto another worksheet and then do the other company, which should be okay also. Some of my students, what they have done in the past is they open a new file. So they open one file, for example Maxis, another file for say Axiata, yeah, And the idea is then they can alternate tab and they can go between the file. That is fine, your working file. But when you bring this information into your assignment, then it will be a great idea for you to actually tabulate that data side by side, so that it is easy for Francis and the other examiners to look at it. I know that Francis also likes you to state that data in the form of graphs. So you can see if some data, it's better if you use a line graph. Some data is better if you use a bar chart. Some might be better if you are just showing, like you are comparing the market footprint, you might use a pie chart. So you in the assignment you will bring the two together, but in your working you can work in two different files. That's fine. Yeah.
Okay, so question, after the revision we do the this morning we also discussed about the capex. Do we need to put this one also in this task one?
No, that is task 2. I will tell you about task 2. Yeah.
Oh, okay. Thank you.
Yeah.
Okay, quick question, Doctor. What is this? Previously on all other modules, we were told that when we do the assignment, we will be, putting ourselves as the consultant of this company or the so-called a certain position. So how do we put ourselves in this assignment? Who are we to this company or to this assignment?
Yeah, normally being a consultant, putting yourself as a consultant to the company is a good way of doing it. Yeah, normally that works. Yeah.
So we are going to be, I myself, I'm going to be a consultant comparing these two companies and presenting it to who, if you don't mind?
Yes, so you see here, yeah, choose a listed company, obtain, write an introductory report arising from, state any problems or assignment. You have to consider that you are writing to an imaginary client. Sometimes they tell you who is the client, like in task 2 they have told you this is a client that is looking to buy another company. Yeah. So there you can address it to the client. In this case you will be talking as a consultant, but maybe you want to just talk in general terms, but the approach that you take is as a consultant. That's a good approach to take. Yeah, anytime.
So can I just say myself as my name and then consultant, market consultant, or how do I
usually I think the recommendation is that you have to try to make your report impersonal, meaning to say you will say the point of view of this consultant is this, or this consultant considers this. Yeah. So you
can, just put the consultant XYZ for company ABC, or I just put that for general.
No need to even put that. Oh, okay. You just straight away talk about the companies and say the view of this consultant is that company A is doing better in terms of asset utilization because they are something like that. Yeah.
Okay. All right. Thank you very much.
Welcome.
Doctor,
okay. Let me show you how. Yeah.
Is it okay that 2 or more people choose the same companies?
We can't help that. I think, we would have to accept that. Yeah, it's perfectly alright. Yeah. Correct. So, of course, that is going to happen. And where you have chosen a similar company, as long as your analysis is original, that is fine. So, when we do the Turnitin similarity assessment, we will take that into account. The fact that some of the background information about the company will be similar and all that. Yeah, so we will actually take that fact into cognizance. Okay.
Okay. Thank you so much.
Okay. Now let me go through with you how the marks for task 1 are going to be allocated. Yeah. This is page 7 of your assignment. The first part is, of course, you get 10 marks, engagement with literature skills. What does that involve? Is the extent of research and or your own reading, selection of credible sources, and referencing conventions, which is Harvard, of course. 10 marks for you. Knowledge and understanding of skills and concepts, another 10 marks, which means these are 20 marks. Yeah, so 20 marks will be given for bringing into your discussion some academic models, maybe even some theories, and some references. These references should be mostly academic references. Please note this. Try to avoid HTTP altogether. Don't use HTTP. Yeah, like let us say if I go to Google Scholar, yeah, let me show you. If I go to Google Scholar, where is this? Okay, maybe I do this now. Google Scholar, all Google Scholar. Okay, and I am talking about dividend payout policies, because you are comparing the dividend payout of the two companies. Yeah, so dividend payout policy, there you go. So corporate governance, dividend policy, and the interrelationship between dividend, R&D, and capital investment. Read the brief summary of it. If you think that is relevant to you, good. Otherwise, look at the next one. You may have to read 4, 5, 10, I don't know, investment opportunities, corporate finance, and dividend payout policy, yeah, before you get one that is suitable. But you see, this is Elsevier. Elsevier is a very, very good source. It's a very, very solid source. So if you think that this abstract, this summary is relevant for you, then that's good. But do not use this HTTP. Do not use this HTTP reference. Use the reference from where it is now currently published. That means the Elsevier reference. So very often they will give you a citation here. Where's the citation? Previous article, this article, get rights and content. I think in this case you will have to go here and purchase the PDF, and then that citation indices. They have given you the citation indices. Even if you go here, you can actually look at this. This is the citation, sorry, yeah. You can just click on this, and I'm surprised it should give me the citation straight away. Cited by, okay, let me go back to this. Normally if I go here, there you get the citation. So I just tap on the this one, I have the citation. Use this as the Harvard citation, this one. Don't use HTTP. Yeah, so that two what do we call inverted commas, yeah, those are the ones for your citation. Okay, that will be good practice.
I have a question.
Doctor?
Sorry.
Yeah. Doctor, can
Go
you
ahead.
can you just help me to finish it off from here? When you have that intention to select Harvard, how do you click here in order to update it actually to the, or you just copy here, then you print it in your
yeah, copy. You copy this and you put it in a separate Word document. Then in the Word document, oops, sorry, I opened the wrong thing. In the Word document, like this is a Word document. Let's say I open a new Word document here, and I'm typing stuff. Now I want to include a citation. So you go to references. Yeah, the style, choose your style. Your style is Harvard, I believe. Harvard, Anglia. This is not precisely, I think, what Trinity St. Davis uses, but at least it will give you most of it. Then you can go and modify it. Once you've got that, then you click on Insert Citation, add a new source, and let us say what you are doing is a journal article. So you put the author, J, and the title, you put dividend payout, the journal name, Finance Today, the year 2019, pages 55 to 68, volume 3, issue 2, something like this, yeah, and there you go. So it will say J 2019, yeah, and then you continue with your story, and let's say you have got another citation, insert the citation. You see it's already captured the first one, that I've already recorded your dividend payout. So new source, let us say this time I am looking at one of my corporate finance books, yeah, do not underestimate the corporate finance books. So let us say book, yeah, so book, maybe the author is Harvey Gill, the title is Financial Analysis for listed companies. The year again is 2018 perhaps. The city is Kuala Lumpur. The publisher is WIC, and this is the second edition, yeah, okay. So there you will go, Harvey Gill 2018, and once you have already gotten these, so you will copy those citations and fill up these boxes, you know. Once you have done that, at the end of it all, at the end of your document, you can click on references. So these are the references that we have keyed in so far. So you will see the references are already there. Gill Age 2018 financial okay. So that should close it out for you, Jay.
Hi, Dr.
Daniel, yeah.
Supplementary to this again, is very similar. In the situations that when you citing something which is actually from the books that you have in your collections, which you are not actually googling it from the Google Scholar, how do you sort of like cite it actually in your Winword? So you just do the manual.
You still have to key in this, whether it is from the web page or whatever, one by one you have to insert the citation like that. That way you will be sure that your citations will follow the format required, yeah, one by one. So
so it means that even from the manual books that you have,
yes, you still have to key in the data here. So what is the data required? This is already a template here.
All right.
Yeah.
Thank you, Doc.
Welcome.
Hi, Dr. Howie. Just a quick one.
Yeah.
Just a quick question. When you add on your citation, right? If it depends on different publication, different year, do we have to list it out within the same reference list, or do we have to break it into two citation?
Definitely, yeah. So each citation you open add new source, and then you choose what type of source it is. So is it a journal article? Is it article in periodical? Is it a report? You see, it gives you so many choices. Yeah. So you'll have to choose this, and the template changes accordingly.
And the what about page itself? I mean, I do see that you have page like 55 to 68, right? But if you want to select like 2 or 3 pages, do we just have to key in 2 entries altogether, or do we put it in a single entry like 55, 72? That should be fine, I suppose.
Yeah, you can do that. Yeah, that's fine. No problem.
All right, thanks, Dr. Howie. Yeah.
Doctor, is page numbers or the number of pages a compulsory thing?
Only for journals. Journal, you have to state the page number. Books, there's no page number. You see, this is a book. This is the journal. This is the Harvard referencing system.
Okay.
Yeah. So now, rather than us going through the full Harvard referencing system, my suggestion to you is let Microsoft Word do it for you, because they will change the template according to whether your source is a book or a journal or a web page or whatever. Yeah.
Okay, doctor. Because I actually, been using the proper way of referencing. The thing is, I never come across the page numbering or any requirement in the Harvard referencing system. So
no, for journal, surely you have. For journal, you sure have.
Oh, okay. Probably I never used journal then. Thank you, doctor.
Yeah.
Thank you.
Okay. Yeah.
Doctor, just one more quick question regarding the references that we use. For batch 17, during our first assignment, we were being told that we are not really expected to read lots of high impact journals. So they also allow us to use the HTTP references. So I'm not so sure what's the difference between this assignment.
The difference is that the person you are talking to is giving you world standard. So I'm saying to you, don't use HTTP. It is not world standard. Okay, just let me tell you, the university that I work for was founded by MIT together with the Malaysian government, and we like to believe that we follow world-class standards, Ivy League university standards, and in any of those Ivy League universities, HTTP is never heard of. It's true, you might have been told that it is okay, but HTTP is not a academically robust reference. Why? The internet is an open source, and anything that is open source, anyone can write that. Nobody takes real responsibility for it. But if you're talking about Elsevier, if you're talking about Emerald, if you're talking about ProQuest, these are all Scopus ICI journals, which they have a certain standing in the academic world. So when you complete your project, and tomorrow if you show it to someone, those who know will appreciate it. That's what I'm saying. Okay.
Hello, doctor. For the assignment, can we use take information from the website?
You can take information from the website and paraphrase it and make it your own. If you want to reference it, then I suggest you try to find a more solid source. That's all I'm saying. Yeah.
Okay.
Like you see, sometimes people ask me, can we use this Wikipedia? Yeah. Of course you can use Wikipedia. You go and do your starting research from Wikipedia on anything at all, and then Wikipedia itself has some references. So where did that information in Wikipedia come? We frown upon using Wikipedia. Most British universities frown upon it. So don't use the Wikipedia reference, but within the Wikipedia article you will have actually citations to other original sources of the data. So try to go back to the original source. If you want
I mean the website of the company, for example.
If it's market information, then I suppose you are okay to use it. Yeah.
Okay.
But
Alright,
not for articles and all that things. Yeah. Thank you for asking that question. Yeah. I think it's fair. I should state that as an exception, that if it is market data from the annual report, then of course we will have to just talk about the annual report itself. Yeah.
Doctor,
Okay.
how about if it's more authentic, what is your source? For example, it's org.org or the government of website or so. Can we still use it from there? The data?
ORG is fine. ORG is fine. EDU is fine. But most of the ORG and EDU have actually published documents. So you won't have to use HTTP. Yeah.
All right.
But if you have it, it's still okay. Yeah. All right.
Hi, doctor. When you're preparing these ratios, there's how many ratios that is needed to be listed down? I mean, there is EPS, there is ROE, there is price earning ratios, EBITDA and dividend percentage. Do we need to go through, elaborate on every ratios that are there, or if we can just limit ourselves to EBITDA, PAT, and EPS, and just do it at the ROE level or dividend yield percentage?
Yeah, so if you want to give a comprehensive answer, then you need the 17 ratios that I gave you. Francis may suggest a few more. So a really good distinction level MBA script has usually got an analysis and comparison of between 17 to about 23, 24 ratios, yeah, because that helps you to give evidence of what you are saying, yeah.
And that also applicable for the cash flows as well, like we have to, like, profit before taxes and profit before operating cash flows, free cash flows, net cash flows, and do we have to put all of that as well?
It would really depend on the context in which you are giving your answer. So if that is required, like for, if you're talking about external sources of finance, and you are talking about the opportunity cost of these external sources of finance, and you need to bring in these models, then yes, that is in addition to that. But as far as your financial performance analysis is concerned, it is mainly focused on the ratios that we have discussed here in this model.
Okay, so we don't really need to make general reporting like profit and loss statement and balance sheet and the cash flow. So if we can just focus on the ratios, and then the rest of the thing just use as the input to come up with the ratios.
Yes. Now, if I'm not mistaken, Francis often says that you can put the P&L and balance sheet only, yeah, in the appendix, if you want, yeah. But no, we don't have to actually put it there. No.
Okay. Thank you.
Welcome. Okay, so you see how the marks are going to be given to you. 10 marks for research and references, 10 marks for display of knowledge, but 50 marks for the analysis, evaluation, synthesis, logic, argument, judgment, analytical reflection, organization of ideas, and evidence for what? For the 5 years performance in the key areas of this. Yeah, these are the key areas. Profitability, which we talked about, liquidity, efficiency. Efficiency here means working capital cycle, yeah, working capital cycle, capital structure, which is basically your gearing and all, yeah. We were talking about gearing, and the debt ratios, debt management ratios, and stock market performance, which mainly relates to, of course, the PE ratio, yeah, PE ratio. There you go. So 50% of the marks are for that, yeah. And then let's see, practical application. Yeah.
All this highlight in yellow, does it mean that when we talk about this, all this must have a report in the appendix? Because I'm not from finance background, I quite blur that what kind of report I need to actually attach with assignment 1. So is it that when we work out liquidity or efficiency, we must have this kind of appendix at the behind of the assignment?
Yeah, usually students will put their schedule of ratios as one of the appendix. So your appendix, you can put probably your statement of profit or loss, your statement of financial position, and then your statement of ratios. But the key ratios that you're discussing, please show them in a nice tabular form, in graphical form, in the body of the report itself. Please remember that your examiners are going to mark for your batch alone 200 different scripts. So make yours a good, nice to read thing, you know.
Okay, then which means that the annual report that we read for the particular company for the past 4 or 5 years, we have to attach together also.
No need.
Do we need to attach?
No need. No need.
Oh,
No
no.
need.
Then
No.
just now you mentioned that probably the appendix will have profit or loss, balance sheet, this kind of thing.
Only those two.
Only those
the-
two. So,
Not the annual report. No.
okay. So for the 5 years P&L and balance sheet.
Yeah, because your document will get too heavy, then it can't go through Turnitin. Yeah.
Okay.
Doctor, is that mean we need to screenshot for the portion we need to mention, just screenshot then put inside our assignment, then we'll do?
For your appendix, is it? Are you talking about the appendix?
Yeah. Yes.
Yeah. Yeah, you could do that. That's fine. Yeah.
Okay. Thank you, doctor.
Yeah.
Hi, doctor. My name is
Yeah.
Nelson. I got a question here. Like what Ms. Sim Salfong said, many of us are not from finance background, and this is our first class FAM, and we find it a bit difficult to
Right.
comprehend. But what I'm going to ask is, are you or Mr. Francis going to show us a sample assignment report, just so that we can see the structure of the assignment, so that it will be a bit easy on us?
I'm sure Francis will give you very good guidance because he's been doing this for many years, and he's a very solid guy lah. I think you all will be quite well taken care of with him. Yeah. Yeah.
Thanks, doctor.
Yeah, welcome. Yeah, I understand, if you start off your master's program with a technical subject like financial analysis, it can be a little overwhelming. I don't pretend that it is not. Like I feel always overwhelmed. I find Industry 4.0, IoT, and all these things so fascinating. But when I go into that world, it's a different world, and I also get very overwhelmed by it. So I can imagine that for people without a finance background, some of the things that we are discussing might be very overwhelming too. But that said, please work as hard as you can on this module, because once you have done this, the other modules are not so technical as this one. So it's good to get rid of this, so to speak. Yeah, I have created now a template for you to plan your writing your assignment. So for example, if the first section says 10 marks, 10 marks for academic references, academic references, that means throughout your work you should have dedicated about 300 words talking about some academic reference that you have taken. Another 10 marks are for evidence of knowledge. So evidence of knowledge here means that you will explain the significance of ratios. That means we give you some credit, if you explain what's the significance of working capital, what is the significance of liquidity, stuff like that. So you will be given credit for that. So 10 marks are for that out of the, if I take it 100, 10% of the marks. So that will give you another 300 words. But of course 50 marks are for discussion of ratios in the key areas of I think we have it there, but never mind, I'll quickly write it down. Profitability, liquidity, etc. I think you all know that. So 1500 words for that. Yeah, and application to we need another one. Yeah, application to the companies. Yeah, application to the case study, the companies being analyzed, and the industry in which they are, then you should be dedicating about well 600 words to that. Yeah. Get rid of this. Let me put this here. And then what's the last one? Yes, transferable skills for life and professional practice. So for those of you who are doing this for the first time, what we want you to do here is for about 300 words, we want you to tell us how you think the skills that you have studied in this module will actually help an organization to become better. And if you are a manager and you have these skills, how will these skills actually help you to be a good to great manager? Because at the end of the day, that is what an MBA program is all about. Yeah. So how this particular module will help you become good to great. Yeah. So you can call it a reflection. You can talk about you know, how this transferable skills, yeah, how this particular module adds value to professional life. Yeah, so let me say that is 10 marks there, 10 marks there, 300 words. Yeah, how this module helps professional life. Yeah, and I think if you add everything up, that's equal to sum. You should get 3,000 words here. There you go. So that's basically a rough guide, your starting point. Now if you use a bit more words in one, then you have to adjust few words for the other. Yeah, but this is just a simple template to tell you how to arrange your words for part 1. And I understand part 1 will be the more challenging assignment. Part 2 is more read and rewrite stuff. Yeah, let's look at task 2 now, because I promised that I would look at task 2. Do you all want a short break?
Yes,
yes,
please.
Let's take 5 minutes.
Let's take 2 minutes.
Okay.
Doctor, this one, just to inform everyone, group 70 and 71, the assignment deadline is 17 December.
17th. Okay.
17th December, it's confirmed, yes, as per in the portal and the timetable.
Oh, wonderful. Thanks, brother. Thank you very much. See you soon.
Okay, sure.
Doctor, this particular spreadsheet will be shared later?
Yes, it will be shared.
All information that you see will be shared. Thank you.
Yeah, thank you. I did that.
How are you doing?
Would like to check with you regarding the 50 marks, the 1500 words. Is that the 1500 words included the chart or data or what?
Normally not, no. But you please confirm with Francis, yeah?
Okay.
Because it's his call, yeah.
Okay, understood. Thank you.
Welcome.
So we can start to study now the annual report.
Yes, indeed.
Okay, all right. Okay. Thanks.
Okay, let's look at task 2. This is Aero Berhad AB. It's a listed company and it operates in the construction of residential properties. I don't think a residential property. Yeah. It's currently financed principally by equity, which is a good thing. That means it does not have a lot of borrowing. That's the meaning of that. Yeah, it doesn't have much borrowing. The board of directors are currently considering purchasing all the shares of an unlisted company, which will allow it to expand into a new geographical region. So they are actually going to go into a new geography. The price asked by the shareholders of the unlisted company equals to about 25% of market capitalization. That is to say, for example, if this company, if AB market cap is equal to say 30 billion, RM 30 billion, yeah, RM 30 billion, okay. If AB market cap is 30 billion, then the purchase value of the non-listed entity should be how much?
7.5 billion.
Wonderful, 7.5 billion, yeah. That's what this is all about, yeah. So the scale of investment is such that AB cannot raise so much, yeah, 7.5 billion from their internal sources. They don't have the cash buffer that much. A decision now needs to be taken on the method of funding. The directors are not sure which source of funding will be best suited to AB. So what is our task here? What is our challenge here? We are going to suggest 4 alternative methods of funding to the board of directors, debating critically the reasons for using each of these methods of funding. All the relevant factors are to be placed clearly in the context of the particular circumstances of AB. So what are the circumstances of AB? That we are going to make a significant increase in the size of our shareholders' investment. Yeah. So if we have low equity and we go and borrow money to have this acquisition, this new acquisition, it will significantly change our gearing ratios. Yeah. Critically discuss part 2. Critically discuss the link between the above financing decision and investment decision relating to the acquisition of the unlisted company. Yeah. So the investment decision, this is a kind of investment decision which requires the kind of cash flows that I worked with you this morning. Yeah. So it's this type of decisions that use your capital investment appraisal. Again, length of words is 3000. It's quite a straightforward kind of task. Let's see how they give the marks. The first 20 marks are always the same. Research informed literature and knowledge and understanding. Yeah, no change there. But here, this is where you want to look at analysis, evaluation and synthesis, logic, argument, organization of ideas and evidence for the 4 methods of funding critically discussed. So you talk for 4 methods, you get 40 marks. 10 marks for discussing each type of method of funding, which I will suggest to you in a bit. Practical application, deployment of methods, materials, tools and techniques, application of concepts. So this is where the concepts come in. Earlier there was a question on that. Formulation of innovative and creative solutions to solve problems, link between the financing and investment decision, problems and limitations of the assumptions that we have undertaken, and at the same time issues identified and recommended for management. So 70% of the marks are here, yeah, and then again the 10% for reflection. So you see the first two parts and the last part is quite similar to what we had earlier, yeah. So let me just get this going. Therefore I can say that this part the same for task 2, yeah, same for task 2, 600 marks there, and the last one on how this module helps professional life, also the same. But we have 40% marks now, 40% marks to discuss the merits, yeah, discuss merits and demerits of 4 external sources of finance. What are the external sources of finance that you might discuss? So here we have what we call the pecking order theory, yeah, pecking order theory. I don't want to make your brain too heavy on a Sunday afternoon, but please go back and read this when you feel okay to read it, yeah. Read this before you see Francis. Yeah, pecking order theory. Basically this theory says that firms prefer, the rules of this theory are that firms prefer internal financing to external, but in this case the option is not available because it's a large sum of money. Internal is not enough, so you will mention that. The second point for the pecking order theory that you have is that in external finance firms prefer private borrowing, so I might straight away put here term loan. That is one of the things you're going to recommend. Term loan, syndicated through the banking system. Because if you have a substantial loan, normally one bank cannot do it, so we do a syndication. A few banks get together and give you a syndicated term loan, yeah. Usually our merchant banks will be the ones who will lead stuff like that. So that's one thing you could do. You could then, after that, yeah, only then go for publicly listed debt instruments such as the bonds or sukuk. If it is Islamic bond, then it's sukuk. If conventional bond, then and loan stock, then just bonds, yeah. So first we want to go for private borrowing when we look at external. Secondly, we go for listed bonds or sukuk, and only thirdly, yeah, they will go for equity finance. Equity finance, so issuance of shares. you can use pecking order theory and say, well, if the company wants, they can borrow some of the money with the banks. If that is not enough, they can also issue bonds, or they can go straight away for an equity finance issue. But because they are already very strongly equity finance, it may be better for them to go for bonds. Yeah. So this is where you need to relate it back to the circumstances of AB, what the examiner wants. Then other sources, because they said you have to be innovative, isn't it, for the balance of the 30 marks. Other sources of external finance, you might want to ask private equity funds. These are a bunch of high net worth individuals or groups of private equity funds who come and put large chunks of money in your business, yeah, and they really analyze your company very, very thoroughly. The good private equity funds, they really do a very thorough valuation of your company. So that's why sometimes people say, you know, the value of my business has increased, and I ask them, how do you know? They say, no, I feel we are doing better business. No, the real test is this. If a private equity fund looked at your business, say 1 year ago or 2 years ago, and they gave you a certain value that your business is worth 500 million, and today when they look at your business, they say, oh, this business is worth 700 million, then you have actually created shareholder value. Yeah. Okay. So anyway, other sources of external finance, private equity funds. Some people like to talk about crowdfunding also, but I don't know whether crowdfunding can work for big amounts, but in an assignment we can put it, yeah, no issue. External finance, if it is something new, you can even look at venture capital. Yeah. What else? Anyone got ideas?
Doc, sorry, this is Shamin speaking.
Yes.
Just a quick question. So how about just trying to relate to our current times, right? So people like Khazanah, right? How would you term them? They are external finance, right? For
external finance, yeah. So you can put grants and funding from what government agencies are? Government agency, yeah.
For JLCs, yeah.
Yeah, government agencies. Example, Khazanah. I think this, what is it called, that one under EPU? Khazanah. Pro something. Pro something. There are a few agencies that will give money, yeah, for external funding, especially if you are expanding in a sector which the government wants you to expand in, then yeah, you can get the money. Yeah. Any others? Yeah.
Would the sale and leasing back of the asset, would that consider as a funding as well? Like suppose say you have a piece of land as an asset, and then just to raise capital, you would sell it to any high net worth individual and lease it back on a certain term. Would that be considered as a funding as well?
It is funding, but it may not be very substantial, to be honest, you know.
Okay.
Because there's a limit how much the sales and lease back people want to do. Yeah. But it's definitely possible. I mean, if you have they are all equity finance, which means the assets all belong to you. So now you convert those assets into a loan. That's innovation, yeah.
I think Malaysian Airlines at one point they explored. I think they wanted to sell some of the. I think most of the aviation business are done that way. Like they sell their asset and lease it back, so that way they can maintain enough liquidity.
They get liquidity. Yeah. Sure. Very good. Okay. Any other suggestions?
New partners, mergers, consolidations.
So now they are already trying to buy this company. So are you suggesting that they merge with another company before taking over this company? Is that your suggestion?
Yes, in a sense, or they look for a new partner in
merger
venture
or JV partner, yeah, JV partner in acquisition. Yeah, why not?
How about overdraft?
Overdraft, my dear, not substantial enough. You see, if you are talking about overdraft, if you go to a banker and say, I want overdraft to buy a company, no, we won't approve it. Because we take the overdraft to be a facility repayable on demand. Whenever we want, we can ask you back. Yeah. That is better for like working capital, short term or something like that. But overdraft can be part of an overall term loan package. Yeah. Overdraft as part of a loan package which includes the syndicated term loan, what we talked about earlier. Yeah, the syndicated term loan. You may need some trade lines, and revolving credit. So what you are now saying to me is that you shouldn't only give the company money just to buy the shares. Buy the shares and do what? You need some extra money for overdraft and things like that. So if you take it from that angle, then you can bring in these things. Yeah, trade lines and revolving credit, and then of course the overdraft and things like that. Okay, yeah, good ideas. So those are the things you will talk about for your balance 30%. Yeah, your 30 marks here will be for other financial packages and innovations. So you see, this is a little bit of mugging up stuff. That's why we have not been talking about this, you understand, yeah? That will bring you up to your 3,000 words. That's it. Once you've got this, you should be able to manage it. Now, in terms of other concepts and models that you need to consider, you must talk about this here. Other considerations to have. Other considerations to have. Firstly, what will be the impact on the gearing ratios? Gearing and capital structure. I don't know whether you can afford the words or not, but if you can afford the words, maybe a short reference in capital structure theory. Yeah. So when the company traditional view, when a listed company increases its gearing, this may have a negative impact on its share price. Why? Because equity investors perceive the financial risk of the company to be increased. The financial risk to be increased. So and therefore require a higher rate of return. Just as a quick note on risk, all risk in finance, like that. All risk in finance is either business risk or financial risk. And in the world of finance, financial risk means risk of borrowing. It means risk of borrowing. Financial risk. Business risk is risk of being in business, risk of running the business, operating risk. Sometimes it is called the operating risk, operating risk. And of course, this risk can be from the market, or it can be individual risk. So it can be individual business risk, individual business risk, or it can be market risk. I mentioned a beta value, you remember this morning? So same thing, financial risk also can be individual financial risk, and this is the one you want to focus on. Individual financial risk, which is based on level of borrowing, composition of borrowing, that means what type of loans you have, composition of borrowing, and of course interest expense and impact on interest cover, one of the ratios that we worked out earlier. So it can be individual, or of course you will still be subject to market risk as well, market financial risk. So the company will become more prone to, because this risk is based on interest rates and credit policies. So you become more exposed to this, policies of financial institutions. So that's the argument, that's the general argument that you can have. So this is another theory that you might want to refer to, other considerations to have, because this company is now mainly equity finance. So if they go for debt sources of finance, what will happen?
Doctor, can I ask a question? With the lack of information, what kind of assumptions should we put on for Aero Sdn Bhd, the sister company?
Actually that's a benefit for you, you realize or not? Because they did not give you a fixed scenario, so you have a free run. You know that this is a listed company, they are in property development, and they are now buying another company. That's a non-listed company, but that non-listed company is in a different location. So you can talk about how you're going to raise the finance and how your investment is going to be worthwhile based on a new market to which you have access to. So you can create any scenario or any number of scenarios there. It is not prescriptive. So I think it's quite helpful to you that way. Anything that's reasonable, you can say I want to join Elon Musk or something like that, whatever. So let me talk about the investment side of it. Link of financing to investment. Does that make sense to you, what I just said?
Yes, thank you.
Yeah.
Would there be political risk as well? Because if you're saying it's another territory, obviously the company they're buying would have been the holder of some land banks and whatever, and then there's a political risk involved, I would think, if it's another territory.
I know,
right?
it's part of your market risk, yeah. Part of your systematic risk, we call it, yeah. Link of financing to investment. I better give you that word also, because when you look at it in your books or manuals, you will see market risk, which is also called systematic risk. Systematic risk. Systematic. So risk in the system, market risk. Yeah. Yeah, most definitely. So link of financing to investment. Firstly, you must remember that the nature of financing will have an impact on the cost of capital, what we discussed this morning, the cost of capital of the company. You know, in that sheet that we worked out on CAPEX, I also have a section for you to try a simple cost of capital calculation, yeah? You try, if you get stuck, ask Francis. He will help you. Nature of financing will have an impact on the cost of capital. So cost of capital may go up, like we said just now. The financial risk may cause the cost of equity, the returns required by equity investors to go up. So it may have an impact on the cost of capital. So this will in turn impact the required return from investment in the new company. Okay. So this is the main thing. Your nature of funding and financing has an impact on your required return from the investment in the funding, and it will have to be accounted for and compensated. Accounted for and compensated. Yeah, I think that is the main link that the examiners are looking for. So that's mainly like the structure for your part 2. Yeah, and I'm just suggesting to you two main theories here: the pecking order theory and the gearing and capital structure theory. You see, in gearing and capital structure theory, you have the traditional theory and you have a Modigliani and Miller theory. I have given you just the traditional view. Traditional view, yeah. For me, in this case, the traditional view is good enough. Yeah, is good enough. You may not need to use Modigliani and Miller, but if Francis says, no, I think Modigliani and Miller is relevant, please listen to Francis with both ears, because he is going to grade you. Yeah, and if he says something that's different from what I am discussing with you today, please follow him. I repeat, follow him. Okay, there you go. You are now right and ready to attack your assignment, and you are now certified experts in financial analysis and management.
Doctor, can you scroll down?
Yeah.
Can you scroll down?
Come on.
Come on. Scroll down. Yes. Thank you.
Okay. I'll be sending this up. I'll be sending all this. This is all the same worksheet. So I'm going to save as final version now, so that you get everything in here. Yeah. So save as I call it final. So you will get this. Yeah.
By end of the day today, it will be uploaded to the portal.
Oh, thank you, sir.
Thank you, sir. No, thank you.
Doctor. I beg your pardon. Just now I missed the the front part, that is the objective, and what is required of things to do for that part 2 that task 2 Can you just
this task 2 here, this one, okay? Yeah.
Yeah.
You want to take a picture of this?
No. The questions and what you require us to do.
Okay. Actually, task 2 is basically a situation where a listed company is buying a non-listed company. This non-listed company is a very substantial investment because this non-listed company is 25% of the market value of the company that's buying over. So if our company is like a 50 billion company or a 100 billion company, this company is worth 25 billion. So of course it's a big investment, isn't it? Now the company has felt that their internal sources of finance are not going to be enough, so they want to go and find appropriate sources of finance. So we can start our discussion by saying, well, you know, normally companies would prefer internal sources of finance, but in this case, because of the size of the investment, internal sources may not be enough, so we look at external sources. When we look at external sources, the pecking order theory tells us that this company would probably be talking to their bankers, trying to look for a syndicated loan. And it's possible that the syndicated loan may not be enough. They may also need to consider for public listing of debt securities. Is it okay for this company to issue bonds, Islamic bonds like Sukuk? We believe that it is okay because this company is financed mainly by equity, so they can afford to take a bit of borrowing. And if they feel that they don't want to increase their gearing risk too much, they can look at equity finance. However, still on the subject of borrowing, they can look at these different kind of financing: private equity funds, crowdfunding, venture capital, grants from government agencies. And if they are sitting on good assets like land bank, someone suggested, they can do a sale lease back. And we were told that the airline business, many of them have done sale lease back for their aircraft to survive, which is very good information. Merger or joint venture partner getting some other company in it. So this does not need to be 100% subsidiary. We can join with somebody else and say, hey, come, join in and let's buy this. We take whatever, 51%, you take 49, or we take 75 and you take 25, something like this, depending on how much control you want.
Dr. Harvey?
Yeah.
This company, do we need to something like Google it from the Google to get the company, or this is just a listed company as mentioned, but it really did not
it's not a real company, Daniel, if that's what you mean.
Yeah,
not a real company.
It's an academic reference that is mentioned there on the first point. I mean, what kind of academic reference that we can give in? I mean, this is just an imaginary company. We're just trying to put in it. Is it academic reference in terms of where we're borrowing our information to prove the point, or how do we substantiate that?
Academic references will be mainly the theories that you are using. Your finance structure theory, your pecking order theory. Your main references will come from there. Okay. And sometimes also the description of sources of finance. What is meant by a bond? There's an academic reference, so an academic definition of that.
Okay.
Mainly.
And the knowledge that is mainly marked based on the subject knowledge that we would show in our writing. Is that the right way of definition?
Subject matter knowledge. So that's why I say, if you want to earn more marks in the subject matter knowledge, use good academically referenced definitions. In fact, your definitions come there in the second part. If you want to earn those marks with your 300 words. So remember, don't go to town and copy whole paragraphs of a definition and put it in. You have only 300 words for that whole of task 2. So use good sharp definitions and very good, strong academic references. Then you will get good marks there. Yeah.
Thank you.
Hi,
Thank you,
Dr. Harvey.
Yeah.
I have a question. Since it's a publicly listed company, in terms of equity finance, how else they can increase their issuance of shares? Can they increase the issuance of shares, or they have other methods too?
All these are the methods we considered, my friend. All these are the methods how they can raise
No,
finance.
in terms of under the number 3, equity finance. So if they are
Issuance of
publicly
share?
listed if they are publicly
Yes.
listed companies, so the shares has been issued and it's being traded right in the market. So can they increase the issuance of existing shares, or how do they do it?
Can they can go in for a new issue, but you see the thing you all should note is that a new issue will take at least 1 year to materialize. They will see the money in 1 year only. So in the meantime, they actually have to start maybe having a payment schedule with a term loan or something like that. So you have to write that whole thing in the paper, and make it believable. Make it believable. Yeah. Of course, if I have already issued shares, I can issue more shares now. Yeah.
Okay, a follow-up question.
Yeah.
So equity finance can also mean that they would want to further dilute the company, right, to raise more money? Or is that a wrong?
Yes, of course. Like if you go with a JV partner, you will be diluting your investment in the new company. But if you issue equity finance, you are diluting the very capital structure or controlling shareholding of your own company. Yeah. So these are things that companies would consider if they want to go into a new geography, because they're going into a new place. So they say, never mind, we have a smaller percentage of a bigger pie. These are definitely strategies that companies use. Yeah.
Hello, Doctor. I'm Kishore here.
Yes, Kishore.
Okay, so since this Aero Sriambra is a made-up company, I just had an idea. What if I could make up a situation where my company has already invested in maybe 20 to 25 billion in some other firms, so I can just make a decision to take back my investment so that I could purchase this new company.
Sell off your existing investments.
Yeah.
In other subsidiaries. Yeah. Sell off other subsidiaries to finance the acquisition of this company. Why not? I think that's a feasible thing. So let me put it down there. Sell off existing investments or subsidiaries to reinvest in this new company. Yeah. Definitely.
And my second idea, I got a second idea. If my company, if like we're in constructions, right? So like all this while we have been buying cements and bricks from another company, and can I just imagine that this new company that we are buying is also a cement and brick producer? So which means I can reduce the cost of my purchasing internally.
Yeah. So if this company is an upstream company, because they are upstream, they are a supplier. Upstream company means they are a supplier. Yeah, they are your vendor. If this company is an upstream company, one of the investment benefits might be a reduction of operating expenditures, OPEX. Yeah. Very good. Yes. Yeah. Okay, so I think that's all good and great ideas.
Dr. J here.
Yes, Jay.
So you are saying that if you, let's say we are doing either in the part of value chain, either we do a vertical or horizontal acquisition. So that will be also considered inside here?
Yeah, because we don't know what is the nature of this company, whether it's in exactly the same business or whether it's an upstream acquisition or a downstream acquisition, we don't know. So like was said earlier, I think you could make some fair assumptions on this, yeah, or you could create a scenario that if this company is like that, you must make sure you qualify this value, because I think the default position is that we are going into another company in the same business as us, yeah. That's the default position. But if you are making an assumption that you are doing some form of diversification or going upstream or downstream, then you should qualify that very clearly in your discussion, because what we want to see is, can you talk about an investment situation of one company acquiring another company and state it in fairly realistic terms using some financial concepts and theories. That's all. Yeah. We won't argue with your facts too much as long as your facts are reasonable.
Thanks, Doctor. So, Doctor, my second question is regarding the ratio analysis that you were mentioning, that we need to have at least about 17 to 23 analysis to be done.
We did 17 for this one.
Do that need to be, projected in the assignment, or do we, is a way that
you can
put in
assign? Yeah, you can put it in the appendix. Yeah,
we could put in or in a box form or something like that. We can just display that.
Yeah.
Right?
Okay. Now for that specific instructions to how you want to display and all that. Like I said, every examiner and tutor, they have their prerogative on this matter. So Francis has the last say on this. Okay, you'll have to check him. Yeah.
Thanks, Doctor.
Welcome. Okay, ladies and gentlemen, I'm going to stop sharing now, and I will send this over in the next few minutes to my colleagues at WIC. It has been a great pleasure talking to you this weekend, and I hope that I have added some small value to your professional life and career. Yes, all the best, and God bless you.
Thank you, Doctor.
Thank you, Doctor. Thank you, Doctor.
Thank you, Doctor. Thank you so much, Doctor.
Thank you, Doctor.
Thank you, too, Doctor.
Bye, everyone.
Thank you. Thank you. God bless you too, Doctor.
Thank you so much.
Thank you, Doctor. Thank you, Doctor.
Dr. Harvey, are you still there, Dr. Harvey?
I think yes, I am.
Oh, yeah.
Yeah, just want to check with you, Dr. Harvey. While we are actually doing our project here, if we have some sort of roadblocks that we may face, doing our work, who is our helpline?
Okay, your first helpline is Francis, of course, but I've also given you my email in the Excel worksheet, so you can also reach out to me, no problem. Yeah.
Thank you, Doctor.
Thank you. Most welcome. Take care.
I'll end the session now. Take care.
Yes, thank you.
Bye.
Yeah, stay safe. Bye.
Thank you, everyone. Thank you very much,
Thank you.
Doctor.
Thank you.
Cheers, bye.
Shukriya, Doctor.
Thank you.